Stavros Tousios for M4Markets. Today we're going to have a look at crude oil and also Aussie against the dollar. We haven't looked at WTI for a while. We did take that fresh low over here. We did a double bottom, actually, to be more precise. And we have rallied to the upside, and we did so. And that sort of pattern that we're left behind looks like an actual wedge, and I'm pretty sure you're familiar with wedges. Now, what this means, since we've also managed, despite the fact that we've once exited and then re-entered below this long-term trend line, we are now back outside that, right? And we are also back inside the short to medium term upside channel, which means now we remain in an upside trend bias to the upside. That doesn't necessarily, of course, mean that we're going to continue high. We have found resistance at the median line over here, as you can see. And the idea here is now that, guys, any sort of correction that it's going to still maintain a position for the crude oil within this channel is expected to lead to further upside. That, of course, is based on the idea that this is a wedge, and wedges usually are followed by deep corrections. So we might see 61.8 or even lower. And of course, then that would supposedly extend its leg towards the 82, perhaps even the top of the channel over here, which gets closer to 88 and perhaps even 90. Now, do we see anything that supports that narrative? First of all, we see an actual divergence over here on the 1 hour that has started to bring a correction, right? This is good. Now we expect that to perhaps stop around the 50% first, which is a double bottom as well. And maybe if it does so in the next couple of days or so, we might find that the 50 Fibonacci and the bottom trend line of the ascending channel to create some sort of cluster around the 76.50, and from there we see if we have any signals that suggest that we are ought to see some sort of bounce or something. That, however, looks like a correction so far, so maybe we ought to see some sort of range first between the 77.50 and the 80.63 before further clarity is provided by the price action. Now, when it comes to Aussie, this is a base channel, right? And this base channel, as you can see now, is decelerating. The upside is decelerating. At the same time, we cannot really not focus on and look at how this looks like an actual head and shoulders, right? Which means, and typically, there could be more downside before there is more upside. Now, if we get that leg, which is where kind of the left shoulder starts, we can say, or down here. Anyway, typically we'll do the 62 correction, right? So we are going to connect the neckline is down here and down here. This is pretty much, guys, our head and shoulders. So the right shoulder is also finished, and we are heading lower down now, and it will be important and critical to see what's going to happen around the 68.40. But then if we break below that level, that will open then the door down to around 66.50. Okay, and from there we can potentially start looking for another leg to the upside. Down on the 1 hour, we are able to see momentum divergence over here, and now we are actually oversold, right? And there is no signal now to suggest that we could continue higher unless if we take this very short-term divergence into mind. But being oversold here, it looks like this is most likely to be an invalid sort of signal. Now you might ask, what does this mean for us? Well, if we take the leg over here and the correction over here, which by the way must be around the 50% as well, yes, between the 50 and the 61.8, then we are going to see that the 100%, which is this leg, will be equal to this leg, is around the 67.30. The first level taken into account is 68.45, then 67.95, let's say the 68, and then 67.30, which is where I will be looking for potential signals to for a potential reversal to the upside.